Tom Gordon, and I've got 5 million for you, and I've got 5 million for you, and got 5 million for you. So yeah, it's my pleasure to be here. Appreciate a few minutes of your time today. I was asked to talk about how can churches and Christian schools prepare for and execute the financing of a building project. I'm only going to really spend some time on the prepare for part. The execution part is a whole different thing that we could talk about together one-on-one another day. By the way, all the pictures that you see up here are clients of mine I've had the good fortune of working with over the past few years. So I won't take the time, but it's been a lot of just a joy for me. So just a couple minutes. I started my career 100 years ago this month at General Electric. I was fortunate to be in their corporate finance group, and that's where I learned the lending business was being part of that group. Became a senior credit analyst for them, always working with companies lending money to organizations. Moved from there into banking, spent most of my time, you see there, Wells Fargo and with Truist, again on the corporate lending side. Over my time, my clients got larger and larger. So some names y'all would know out here that I had the good fortune of working with was Universal and Disney and CSX. So I just got to see from the corporate world, the lending world, from the startup, the entrepreneur, up to the large of the large, and it was just great training. So the last couple of years that I was doing that kind of thing, I was really getting the itch, the prompting. How can I apply what I'd learned over the years in a way that was altruistic, in a way that could give back to my fellow man? I never really thought about working in the church world. I didn't know. My wife and I have always been involved in our church. We've always volunteered. We serve in our children's ministry, which is a hoot. I love it every week. But anyway, never thought about the church world as a business, as a vertical industry. But I was just so fortunate over a 2-year period. Where can I work in the altruistic world to get to start working with churches and applying my background as a lender in a way that helps churches prepare for and execute financing. So I've been doing that coming up on 6 years now, and it's been a joy for me personally. So Cornerstone Funding, being a church advocate, what does that mean? So that means a couple of things. The first thing is that if you go to a bank and you or any other entity, your organization, you go to a bank and you say, we want to borrow X amount of money to execute the vision that brought you here today. How do we do that? How do we borrow that money? Well, they're going to look at you through metrics. They're going to compare. You want to borrow, make up, what would we say, $5 million? So you want to borrow that $5 million. They will look at your organization through metrics, your income statement metrics, balance sheet metrics, equity metrics. Those things are pages and pages long. And so then they'll just see, is your organization a safe entity for us to lend money to based on how much you want to borrow, based on those metrics, and you get your yes or no that way. As a church advocate, what I do is I was that banker for 32 years that did that. And so what I do is you and I will sit down with your financial statements before we're talking to any bank. You and I sit down and we go through those metrics together. And so we look at, we'll say, okay, you're good here, here, and here. We need to work on these things on your metrics to get you into a place that will have you approvable. So then what we do is that builds the pathway. That's the beginning of the plan to get you from where you are to where you want to be to execute the project that brought you here today. Let's use our number, $5 million. You need $5 million, and we've identified you're not ready because of these metrics. We build the roadmap to get you ready, addressing those metrics, so that and that could take a few months, that could take a year or more. So it just depends. And I don't know if Don said it today, but we often are engaged with clients a year plus. That's just the name, that's just the business. So we work on that roadmap to get you ready. When that clarity is there, the steps are in place to get you on track to achieve the metrics that we need to achieve. Only then do I go talk to banks. And so over the past 6 years, I've come to represent about 50 banks, And so what I do then is I go present your church to those lenders, and I say, here's the metrics that you want, and here's how the church is meeting all of those metrics. They say, wow, that, they'll say, that sounds great. Here is a written offer of financing for our $5 million project. And normally what will wind up is 2, 3, or 4, 5 written offers or more written offers on that project. I bring those back to you. We go through them together. And what that ultimately means is you are now not asking the bank for a loan. You're choosing which of those banks do you want to work with. And that's the name of the game, because we just don't turn you in until I know you're going to pass the test. And so that's how we create. That's what I mean by church advocacy. All right, so the business aspect of a church, we all know this. If the business aspect of your organization does not function well, your ministry will cease. And so Don touched on this earlier, and I hear this just over and over, fixing the business aspects of your church that are clunky, fix them now before you're trying to expand, because those problems grow as you grow. They grow with you. So fix them while they're still manageable. A saying that I always enjoy, I don't know why I think it's funny, but the nonprofit is a tax filing status. It is not a business model. It is good and healthy for the church to generate some bottom line, net income, profit, whatever you want to call it. And I'll come back to that in a moment. So this is what Chris was mentioning a moment ago. Cash that you have plus the fundraiser, which is Chris's world, plus me, the loan equals the project size. And that is the number that the builder, that the architect needs to know to help you design, to help you get how much can you afford? What should they be building for you? So that's the number that everybody needs to get to. Normal church. I work with Normal Church every week. Normal Church is the color green, they're blue. That's, they're growing, they're doing well. People are coming, people are giving money. It's going great. The line there in the green is the expenses. You got to spend money. You're hiring people. Things are great. Compare them to Margin Church. So you'll see, again, things are going well. People are coming. People are giving money. The revenue there, that blue line, is the same as Normal Church. But along the way, Margin Church has made the decision to keep a cap on their expenses, to keep their expenses down. And so what that does is that creates what I call margin, which is a significant net income, bottom line profit, whatever you want to call it. And what that does over time is that creates cash for your church, cash, that translates into cash, your savings account. What margin is flexibility. Margin is freedom. Margin is options. Margin gives you room to do things that you want to do. And just 2 super quick stories. Church I go to, a lot of margin, been doing this for years, really focusing on this for years, and they've built up a good margin. There's a widow in the church. The church built her a home, handed her keys to the front door. So they had the ability to do that because they had plenty of margin. I got the other side of that sort of situation. I received a phone call last night from a pastor who had been running Normal Church for 5 years. And they decided they were going to expand about a year ago. They had opened a new campus. It has not gone well. The income hasn't come in like they had hoped. And because they were running, every $100 they brought in, they were spending 99 of it. They didn't have margin to keep floating that expense for a significant period of time, to the point that they couldn't pay their bills. And the pastor was calling to tell me his story, that he had to go to another pastor buddy of his and say, can you help us? And that other church was helping them survive. And so those are sort of 2 of the opposite sides of the same coin about operating with margin. So here's Sister Sally. Sister Sally is great. Your church is doing well. You need to add some staff. You love Sister Sally. She checks all the boxes. You're excited about hiring her. She's going to be a senior member of your staff. So salary, in my example, your salary plus benefits, plus cell phone, plus mileage, she's going to cost you about $90,000 a year. At the same time, you want to update your lobby or something in your church, and you want to engage with this team to do that. And so your estimates on that are going to be about $1 million a year. If you borrow that $1 million a year, your annual payment, your principal and interest on that, is going to be about $90,000. So what that means is, if you have hired Sister Sally, you have spent that $90,000, and you have reduced your borrowing capacity in the eyes of a lender. Your net income, your bottom line, is $90,000 less. They can lend you $1 million less than they could before you hired Sister Sally, because your fixed costs have increased. And so I'm not saying hiring Sister Sally is a bad thing. We all need staff. I get it. But be very, very judicious in how you spend your money, because the name of the game right now in this season, as you're preparing to work with this team to build your vision, the name of the game is creating margin. So do you need to increase your fixed costs by increasing salary or rent or leasing the big bus? Or can you create margin so that you have an increased borrowing capacity? Those are the questions. So if you create margin, again, that creates flexibility and generates cash. And so, yeah, that is an important component that I think I hope is helpful to you. All right, so a few things. How do banks evaluate a church loan request? And just super briefly, we've talked about cash. Cash is critical for any organization. Nonprofits, churches certainly included in that. So generating significant cash through margin is very important. Cash flow, we talked about this. I was speaking with that gentleman earlier today about, what is cash flow? Cash flow is how cash moves through your organization and what is left over to fund the project that you need to fund, or what is left over to pay the debt service on the loan request. And so just very briefly, and that's what banks work on, is what is the net cash flow of any organization, and I'll talk about that in a second. Very, very briefly, you guys are in a season. It's why you're here today. You're preparing and you're thinking about how do you execute on this vision that you've got. And part of what I hear sometimes from pastors is, we're in the business of serving and ministering. And if I'm sitting on several $100,000, $1 million, $2 million of cash, I should be using that money in the community. I get that 100%. Think of this as a season of time that you need, you're counting the cost. You are preparing to spend some significant money to further your vision. So it's okay to generate significant bottom line profit. It is okay to generate a significant balance sheet right now, because you're going to need every dime of it when you're engaging with this team to build your vision. So those are the things. Generating cash flow, generating cash, that's all through margin, and then the collateral coverage. So I say this all the time, but it wouldn't be a good financing presentation without a confusing slide with a lot of numbers on it. So there you go, you're welcome. What banks are looking for, you'll recognize this. This is just your net income, your expenses equals change in net assets, as we call it in the nonprofit world. To that number, adjustments are made, and this is how banks get to your cash flow. And I'm not going to spend any time on this today because everybody's a little different on this one. But the adjustments that are made, you would send me your financial statements. We would schedule a time to get together. I'll go through your financial statements with you with those adjustments to determine what is your net cash flow available for debt service. That tells you how much that you can borrow. So that's how it's done. And I won't talk about the schools today. So that is it for me. I appreciate your time, and if I can be of service, love to talk with you again.